Welcome along to the Property Academy podcast. I'm your host, Ed McKnight.
I'm Andrew Nicol.
And today on the show, we're talking about house prices. Is the boom over? Now, I know that a whole heap of you guys will have seen the media stories about house prices declining over the last 2 months, and we have seen them. For you guys watching on YouTube now, you can see some of these news stories that we're pulling up. I see even stuff said bigger house price falls expected. Perhaps not a crash, commentators say. There was one from ANZ expecting house prices to fall by 7% this year.
What defines a crash? Because I was reading that exact article and then they said a fall of 14%, but then a soft landing. I was like, 14% doesn't sound like much of a soft landing.
Look, crash does not necessarily have a strict definition.
Right.
It's more of one of these things as, you know, what's terrifying.
It's just what you economists make up.
Most of it's all made up. But what I wanted to do today, though, is also talk that I have also seen articles from the likes of CoreLogic saying house price rises not out for the count just yet. So, for instance, I saw Miriam Bell, former editor of New Zealand Property Investor magazine, who now works for Stuff, reporting just at the start of February when CoreLogic came out and said house prices increased in January, but in actual fact, Rhines came out and said that house prices decreased in January. So what's that all about? Well, we're going to go through all of this in today's episode and what the potential house price falls that we're going to tell you about mean for you as a property investor or a property seller. But let me just go through first the evidence there is of a softening market. So first of all, we've got what we just talked about. Rhines came out in January saying house prices decreased by, I think, about 1%. But also in January, CoreLogic came out and said house prices up 2.1%. So who's right?
Depends whether or not you're buying or selling.
Well, it actually depends on which data set you look at. What you've just got to remember is that Rhines report on a month-by-month basis. So when they're looking at January, they're looking at what you and I think is January, the calendar month, whereas CoreLogic report on a rolling 3-month basis. So when they say house prices up, they're looking at it over a 3-month period, which is just very important to note. What that does mean is that Rhines' numbers tend to be more volatile. They'll go up or down. You know, a 1-month change does not a trend make, as we like to say. But also, on the other hand, CoreLogic, it doesn't tend to be as reactive, but is more stable. So it's really good at showing us real trends. Some more evidence I have that we are seeing a softening market, though, is that we are seeing FOMO leaving the market. So if I show you guys, for you guys watching on YouTube, you can see a graph in front of you where the number of real estate agents saying that FOMO is in play for buyers is the lowest since Tony Alexander, independent economist and friend of the show, started recording these results. Now a net 20% of real estate agents are saying FOMO is still at play. So definitely there is some fear of missing out still there, but it is the lowest in a very long time. And I've got another graph for you people watching on YouTube as well, which shows that fear of overpaying is increasing. It is actually the highest since June 2020, just as we were coming out of the first COVID lockdown. So what are we seeing? We are seeing people saying, first of all, we're seeing data providers, suggesting different things about whether house prices are going up or going down. We're seeing FOMO being reported as very low, fear of overpaying as very high. And actually, I'll show you one more graph for you guys on YouTube and you here in the studio, Andrew. I'm now showing you, when asked how real estate agents feel prices are changing at the moment, for the first time since April 2020, more real estate agents are saying they're declining than real estate agents say that they are rising. So we really are start seeing this. And actually,
these are the people on the ground. So that's the interesting part.
Well, actually, let's come over to somebody on the ground. Andrew, you're starting to see a bit of a change in the market as well. What are you seeing?
So really interesting change in tone this year. Last year, to be fair to say, that developers while they'd take my phone call, I'd have to court them and take them for lunch and give them drinks just to get a couple of deals. Nowadays, a few months later, now that we're in 2022, basically I can't put my phone down without having another call from a developer. Last year, a developer could sell their own stock if they had a few monkeys in a room dialing numbers. Now, the mood has changed in the market, particularly in the off-the-plan buying, because, of course, you're seeing all these newspaper articles about price escalations and sunset clauses and inability to get supplies. So I think there's a lot more nervousness in the market. And so as a result, developers just aren't able to move their houses. So that means that they're willing to do deals. So I'd say that every conversation I have with a developer at the moment is, well, what deal can you give my investor? And if it's not a very good one, I'll say no and I'll get the next one.
And what's important to note, as well as the return of deals, which Andrew was just talking about, is these price changes are not evenly distributed around the country. So again, for you guys on YouTube, you can see here that over the last 2 months, December and January, New Zealand house prices, according to Rhines, have gone down by 2.62%. Now, that's not a lot necessarily, but it's quite a bit for 2 months, but down 2.62%. But what is interesting is that of New Zealand's 17 regions, 8 over that 2-month period saw prices rise. So 8 regions saw prices increase. Those are places like Taranaki, Northland, Southland, Marlborough. I'll give you them all actually. Nelson, West Coast, Bay of Plenty and Canterbury. All of those saw house prices rise over the last 2 months. Only 7 saw house prices fall, which is everywhere else if you weren't mentioned in the first one. But what is interesting is that the areas, the regions where house prices fell are the more populous ones. It's the ones where you've got more houses to sell. And so as a whole, house prices in New Zealand fell because the regions where house prices went down were Auckland, Wellington, Waikato, and Otago, the more populous areas. So again, what I want to get across is while as a whole, we have seen house prices being reported as falling. You would have seen that in the media over the last couple of days. There are still about half the regions of the country where we have seen stimulus, where we've seen house prices increase over those last 2 months. So I do think this is really, really important just to note as well. So we're not necessarily going to see this everywhere in New Zealand react the same. But let's bring it back to the people listening to the show, Andrew. What does all of this mean for investors listening to this? Should they be worried about house prices not increasing as rapidly as they have over the last 2 years?
Well, I think that'd be completely fair that they won't increase at the same rate as we've seen over the last couple of years. But that's not a reason to not invest if you're a long-term investor. I think this year is going to be the year of the deal. I don't know if that's a zodiac sign or not, but that would be mine, I guess. The year of the deal, because when I'm talking to developers at the moment, I am getting some of the best deals we've seen in a long time. You're able, one developer that I'm working with right now is considering a proposal that I've put to him where he drops his prices by $35,000. Now that's 5.5% of what he was wanting. Now that conversation just wouldn't have been had last year. And it's really interesting in property. It's a little bit different to other things. Lauren comes home and she's got a bag of goodies and she thinks she's buying more things because there's sales going on. Now, when there's discounts in the market, people tend to buy more. That's not the case in houses. People panic, or shares. People panic and think, oh God, the market's crashing. Look, if you're buying for the long term, now when there is a bit of a softening in prices and a more willingness to do a deal, I think that's a great time to buy.
I actually saw something on Instagram where I wish it was our post. I will probably make a post out of it anyway, where somebody said property shares and assets are the only thing where things go on sale, prices go down, and people don't buy more.
Yeah, absolutely. The other thing I think we're going to see a lot of is higher yields. So rents are up about 6% over the last 12 months. Now, if we do get a position where house prices stabilise or even drop a little bit, but rents are going up, then great, we've got better yields. So again, the cash flow might be better in an investment now than what it might have been if you looked at it 12 months ago.
And what I just want to again show for anybody watching on YouTube is just the annual change in rents over the last let's call it 14 years, you can see in the start or in the near the end of 2021, so about September, we saw the flow or the change in rents increase to the highest it has ever been, 7.76% over a 12-month period. So, and this is directly from Stats NZ based on what properties are actually renting for, not just what prices are being advertised for on Trade Me. So again, we are seeing some of the fastest rental increases we have seen in a long, long time. It started to stabilize more recently around the 5.82%,
Still high,
but still very, very high. So we actually do tend to see this when house prices stabilize or go down a bit.
Yep.
Rents keep on increasing, and so yields start rising as well. So this is going to be something that whether you have already purchased or whether you're looking at your next purchase as an investor, we may start to see those better yields. I would expect those to start coming because we are seeing rents spike quite a bit. Now, let me ask you this, Andrew. One other thing that particularly people who have invested in new builds really need to be thinking about, especially if you've got something under contract at the moment, is what happens if I settle a property or I've signed up to buy a property 12 months ago for, I'm going to make up a number now, 700K. I come up to settle it on that property. Prices have dropped a little bit. It's now only worth 680K. That's going to be pretty scary for people.
Yeah, I can understand how scary it would be because I bought a property exactly in that scenario. So one of my properties that I bought, by the time it came up for settlement 12 months later, it was worth, I think, $20,000 less on valuation than what I paid for it. Now, that wasn't my first investment, so it wasn't a scary investment. Now, that property's probably doubled in value now since I bought it. In fact, I'm certain it's probably been at least that. Time heals all. It doesn't really matter. And I settled that property. I rented it out. It really didn't matter. Now, yes, you do need to have a bit more usable equity there. So if someone was right on the cusp of usable equity, that might be a problem. But if you signed up for a property 12 months ago and you come up for settlement, generally speaking, you've had some growth in your own house, so it's probably not the end of the world otherwise. So I would say to any investor, if you do find yourself in that situation, do not panic. Do not sell and crystallize those losses.
I think the key point there as well is that let's say that you did buy a property 12 months ago. We've seen house prices increase over the last 12 months, something along the lines of, depending on where you are, 20 to 35%, 38% if you're in Christchurch. So if you're going to settle tomorrow or next week, you probably don't need to be worrying about a 2% decrease, even if your specific region got that 2% decrease. The people who might need to think about that would be if you purchased a property, say, 2 months ago and we continue to see a decline. I think what's going to be really interesting and important to see is we've got to remember that house prices only started the slide in the Rhines data in December. Now, what happened in December? Triple CFA came in, lending became a bit tighter. Now, what I would expect to see is, let's say that does get reviewed either by the Labour government, this side of the election, or the other side of the election. I think there's probably a good chance that would see some of that either reviewed or the way it's implemented softening. So if we see that reviewed, we might see prices rise a little bit more. We might see some of the steam come back into the market. So I think this is something you just need to be thinking about. Other thing that I just want to mention about the decrease that we saw in house prices in January, according to the Rhines data, you've got to remember as well that the number of houses sold in January was like 3,000. It was like nothing. Now, why would that be the case?
We're all still on holiday.
Well, that's part of the reason. The number of houses sold in January always goes down. But our biggest market, Auckland, what happened in December and January? People like me all got out of Auckland. We weren't thinking about buying houses because we finally had our freedom. We were, after 3 or 4 months of being cooped up, we were able to get out of the city. So it makes sense that, to me, that January would be an extraordinarily quiet month in terms of house sales, both because of triple CFA, but also because of that one-off effect where pretty much everybody in Auckland managed to get out because we wanted to leave the city that we haven't been able to leave for a while. Now, I expect that we are going to talk more about this as we get more data. You know, we can see early indicators like from Tony Alexander's real estate agent survey where some of the FOMO's coming off, though there is still more agents are not saying some amount of fear of missing out is still at play. We're seeing fear of overpaying coming back from some data providers, but not all of them. We're starting to see house price falls. But I think those two things that Andrew said are really important to keep in mind. We're going to start to see the return of the deal. Not the TV show. I mean, actual deals in the market. And we're also going to see those yields start to climb as house prices stabilize and rents continue to increase. So it's not necessarily the end of the world. It's not something we should be, tearing our hair about, but it is going to provide some opportunities for people who are able to take them. It's also going to mean that there are some things to think about, let's say in 12 months, if you did purchase a property and it turns out that the market is a little bit under what you purchased that property at in the future. But we'll do another episode on that because there are ways or strategies you can take in advance to make sure that you are protecting yourself as much as possible. Let's wrap it up there, but please don't forget to rate, review, and subscribe to the podcast. And if you want to see all of the graphs, all of the news stories we shared visually here in the studio, then make sure you head over to our YouTube channel where you can check out this podcast and see us in the studio. We actually do release 2 videos every single week on our YouTube channel. One's a podcast like this where we share our screen. The other is where we deep dive with a whole heap of visuals into one specific topic. Now, you can just Google that. Google Opes Partners YouTube. It'll be the first thing that comes up. Listening to the Property Academy podcast. I'm your host, Ed McKnight.
And I'm Andrew Nicol.
And we're going to be back again tomorrow with even more daily strategies, tactics, and insights to help you get the most out of the New Zealand property market. Until next time.